most investors going about life, investing, and retirement planning as if nothing unusual has happened to our financial system, not realizing the repercussions of the 11 trillion that's been pumped into the US financial system in the past 18 months alone. I just want to share with you a report we have just put out. At least 4 billionaires have stated publicly that Americans aren't paying enough attention to this development. And now a former Goldman Sachs banker says sooner than most people think, millions of Americans will potentially be pushed down out of the middle class, out of private retirement, and out of a decent life based on independence and privacy into a collectivist nightmare he calls financial lockdown. So find out how to protect yourself, your money, and your family with a free copy of his new report. In it, he'll show you the 4 steps he recommends that you take immediately. So if you'd like a free copy of the report, you simply have to go to 2022wakeupcall.com. Again, that's 2022wakeupcall.com. Hi, this is Daniela Cambone, and welcome back to Stansberry Research. Thrilled to be bringing back our friend Kevin O'Leary of ABC's Shark Tank, also known as Mr. Wonderful, and to be launching our brand new monthly series with Kevin, Wonderberry, which basically blends the best of both worlds. Kevin O'Leary meets Stansberry Research. He's going to be giving us the lowdown on the headlines you need to be paying attention to when it comes to making calls on your bottom line. Kevin, always good to see you. Welcome back.
Great to be here. Thank you.
So I want to start by talking about what's happening on Wall Street right now, because as we know, first it was SPACs, then it was tech, and now it looks like everything. Target, Walmart, all really suffering, from the fate of inflation here. Is anything safe, Kevin, right now?
No, we're having a garden variety correction. Valuations got stretched. There was tremendous liquidity in the market. You got to remember, prior to the pandemic PPP programs and all the support and printing $4.5 trillion, this was standard volatility. It wasn't uncommon to have the VIX past 30. And we forgot about it. A whole generation of investors forgot or never learned what volatility was. Well, welcome to volatility. And now it's affecting many different sectors with the exception of energy for obvious reasons. But each sector seems to get maligned every second week. And so the whole market's PE is being taken down with the uncertainty around inflation, Ukrainian war. And this has been talked about for weeks now, but there's no safety in saying I'm going to go hide in Walmart, for example. You just lost 20% there. That's because the market's trying to figure out what comes next.
And what does come next, Kevin? Because I'm sure you get stopped all the time. I do as well by worried investors saying, I've just lost millions. How do we know if the bottom is near? Have we bottomed now?
No, generally a bottom, and I've seen this movie so many times before, is you need a big institution to go bankrupt. That always helps. I mean, you have to sacrifice an institution to get this to work, because then you get a dramatic flushing of equity positions as panic sets in. Margin calls are called in, shorts, are bought. They basically bought themselves in already, and then you get this big leg down. Usually it's 5 to 10%, and that is the bottoming process we need. Now, this time I was thinking it might be in the crypto space, but that's already been decimated, and so it may be something else, a financial services company, or there was some rumors about Coinbase that turned out not to be true, but you need somebody's offside somewhere on a leveraged hedge position. You just don't know who it is yet. And they're big. And we're going to wake up in the next 10 days, 20 days, and you're going to find out they're a zero. That's a good thing. And I'm waiting for that to happen because we're getting close to a bottom here.
Okay. So when that happens, any feeling as to what company it could be, Kevin? What sector?
No, it's hard to say. It usually happens in financial services where somebody was trying some strategy, a leverage strategy. It's always leverage that does this, or a hedge fund. Hedge funds, a good hedge fund that loses 10 or 20 billion, that's also good for flushing, and that's happened many times before. These are guys that have never seen this kind of a market. So they set up a position that went awry, couldn't unwind their leverage, and they just get wiped out. And again, I feel sorry for them, but I think it's very healthy when that happens. And the trouble with this correction is it's a slow grind down 1 to 3% a day. And you don't really bottom till you get that flush.
And if history is any indication, we tend to always have a robuster market around the time of the midterm election. So that would kind of time in perfectly.
Yeah, I mean, every time's different, but this election is going to be really interesting because if the polls are any indication, wow, we're going to get a shift in both, the Hill is going to completely shift. And so you would think there'd be some policy moves now by Biden to try and offset the slaughterfest he faces.
Let's talk about inflation now, because everyone's coming out, Bernanke, Bezos. So let's start with Bernanke, former Fed chair, coming out earlier this week. He has a new book coming out also, by the way, saying that, hey, the Fed really made a mistake here. They were late to respond to inflation. Thoughts on Bernanke's comments? Are you surprised he came out with such a statement?
Yeah, a little bit. It's kind of a rear view mirror statement. But remember, you only have to go back to 2020, 2021, when the height of the pandemic was ripping through the economy and people had tremendous fear. And not only was the Fed, trying to be very accommodative, but we were also printing $4.5 trillion. And so it's not a big surprise that you would have inflation now. That's what happens when you run the printing presses. It's unprecedented to print that much money ever in the history of our economy. And so having some inflation. Now, the big question now is what portion of it is transitory? Let's take a hint from what happened with Target and Walmart. Half of their problems were supply chain issues, the wrong mix of product, and increased costs of transportation. So it wasn't that the consumer rolled over and didn't want to buy anything. That wasn't the issue. The issue was they really had increased costs. In the case of Target, an extra $1 billion+ in just transportation. And so that really is something that's transitory. That's not going to be around forever. And so you have to kind of put that into the cake when you're talking about 6 to 8% inflation. Maybe 4 to 5% of that is real, and the rest of it is short term. And the market's kind of waiting to see which quarter we start to see that wane a bit, maybe come down to 7-6%.
Right. And what are your, there's two sides here, folks who think that the Fed will continue hiking until they get to that comfortable level of inflation, and others saying there's just going to be one more rate hike in June and that's it, and they're going to have to reverse course. What's Kevin's take?
Yeah, I mean, if you're a real pessimist, it's one more 50 bip hike and then you have to reverse course and take it back 90 days later. I don't think that's going to happen. The reason I say that is if you look at employment, we're at full employment right now. It's really hard to forecast a recession at full employment. And so we're in a really interesting situation here. It's, for the real pessimists about the economy, they're saying, well, the consumer spent, they're about to roll over. But everybody I talk to that's selling to consumer, including the Target and the Walmart numbers, show that the consumer is still flush with cash. It takes a long time to spend $4.5 trillion. And so each recession is different. And this is a predictive correction in the market. We haven't actually had the bad news yet. We're just predicting it. So we're pulling down valuations and really rapidly across all sectors. There's nowhere really to be safe right now, with the exception of energy, because energy prices continue to spike and the cash flows of oil companies that have fallen out of favor. And even the president didn't like pipelines, et cetera. Well, that turned out to have been a mistake. And now we have these exceptionally high $4.5 to $6 gallon prices, and consumers are not happy.
So just one more point on Bernanke. So when he says there should be a period in the next year or two where growth is low, unemployment is at least up a little bit, and inflation is still high. So he says you could call that stagflation. Do you agree with that? Is that the proper terminology we should be using?
Yeah, that's for his scenario, it is, but I don't agree with that scenario at all. First, I would say, including anybody that wants to make forecasts about when the start of a recession happens, they simply don't know. And nobody knows right now, because it's really hard to read the tea leaves in this market. And so the question that everybody, including me, has every day when I see a correction like this, when I see Walmart down 20%, for example, which is a bellwether stock, if I'm an opportunist, I might put on a position. But what I'm doing right now is I'm waiting. I'm waiting for the big event, as I call it. And you get these events, and we talked about it. That day will be an interesting day to put 130 or positions on. It'll be a day of panic. We'll be down somewhere between 2,000 and 3,000 points. And yeah, it's horrible to talk about it, but that actually is very healthy, very, very healthy. You get the PE of the market down into the 15 range, even lower. That's a tremendous buying opportunity. And I actually think earnings are going to be pretty good into the first and second quarter next year because we're still at full employment. And so, you know, all of these concerns and the Armageddon scenarios, and these are putting pressure and compressing PEs, but I haven't seen the downturn of the consumer yet. And so you need to kind of see that. Everybody's forecasting it, that's true, and pricing it into the stocks of consumer products and retailers like Walmart and Target, but they actually haven't seen it yet.
Something else I'd like your thoughts on here, Kevin. The dollar strength in this tightening environment. In past tightening environments, we've seen reversal. So why has the script flipped this time around? Why is the dollar so strong?
I think what's happened is it's a safety trade. I mean, you've really got an unusual situation occurring in Europe with this unwinnable war. It seems it's going to grind out for years, potentially. And so obviously, when you think about that, people want to reallocate their currency. And right now, the US dollar is the safety trade. It is interesting to think about what that means because it should have shown up in a higher move in financials. JP Morgan would be a good example, yet the stock is down 20%. And so something's fishy, if you want to call it that. Strong dollar, higher rates, and financials turn down 20%. That's unusual. That's what I'm saying. This market is not yet finished trying to find its new equilibrium because nobody would have forecasted that. There were people just 8 weeks ago talking about loading up on financials and energy. Energy was right, financials was wrong. You basically made no money if you put those on equally.
What do you say to some experts out there who are saying the Fed number one focus is not inflation, it's actually keeping the US dollar and saving the US dollar right now, as we've seen other countries like, you know, Saudi and looking outside of the US dollar system, and that's why we're seeing this dollar strength?
Yeah, maybe. I mean, you know, it kind of, if you try and, you know, figure out the Fed's mandate and how they think before they make their moves, it's the definition of insanity, because at the end of the day, inflation is their number one mandate. But also, they know they have a delicate situation, try and attempt a soft landing. And what the Fed doesn't know, and what every other investor doesn't know, is how much of this inflation is real and how much is transitory. Remember, we've never had a global pandemic that's a rolling pandemic. Right now, if I were the Fed, I'd be looking at what's happening in China, which refuses to take Western vaccines and is constantly shutting down cities, millions of people locked in their homes. That is very unproductive. That damages supply chains. You heard it from the CEO of Target saying, you know, this is killing us in terms of forecasting what we need into the back end of the year because our factories are shut down. And that's kind of unique to China. Most countries are willing to accept the abundance of Pfizer and Moderna vaccine, which actually works. The effectiveness of the Chinese vaccine, whatever that's called, is sort of 35%. So if you're only 35% effective, you're going to have rolling pandemics forever. And so I think this has got to get resolved. And I think the leadership of China is probably worried about these images of people throwing themselves out of windows and lowering their dogs by their tether, you know, so that they can do their business on the ground 20 floors down. I mean, the whole thing is crazy. But that's something that's got to get resolved because that supply chain directly infects inflation in the US. Until we solve for that, we're going to keep having this spiking inflation. And I think that's something that may be out of US control.
Yeah, solid point. One more point on inflation, then we'll move on to talk crypto. I just want to get your thoughts on Bezos' attack on Biden when it comes to inflation. Was he right to do so?
I think everybody has a right to have a voice. I mean, there's a lot of critics, and right now, Biden is, well, his poll numbers are worse than Trump's ever were. So, you know, you've got a really interesting situation here. People are not happy. I mean, the tone of the situation seems to be, and maybe this is Biden trying to placate his party because there's so many different factions. He got hired on a mandate to solve the pandemic. And he sort of got that done. nobody asked him to turn himself into FDR and give the whole country a new deal. I mean, they're still talking about a Build Back Better spending bill of $2 trillion. That's sheer madness. You couldn't do this now with inflation at 8%. I mean, why even talk about that? You're doing it to play safe those party members that have not forgotten that they want to spend another $2 trillion. That would be financial suicide. And I think you've got enough anti-Build Back Better within the Democratic Party that it's never going to happen. Meanwhile, you're just months away from a midterm that is going to just completely change the tone of Washington. And that's almost certain at this point. I don't know how that would change. You saw that it seems that every candidate that Trump supports wins. And so that's a very strange outcome at this time when Trump himself hasn't even said if he's going to run or not. He just seems to be a kingmaker. But you have to watch politics as regarding policy. And so if this plays out where there's a big shift in leadership in the House, then you get gridlock for 24 months. And that's probably a good thing for markets, which means there is no policy, there is no tax hike. And on top of all that, the SEC came out with 54 regulatory recommendations. That's unprecedented. And you know there's going to be pushback on that politically. I mean, Gensler's ideas about re-regulating the environment, and not only the environment, but also business, are extremely unusual and incredibly aggressive. And at a time when the economy is trying to be, divined by investors, that's very troubling. I expect a lot of pushback over the next 48 hours on these policy proposals.
All right, Kevin, let's talk the crypto space now and the $1 trillion wipeout basically from the space. We know how the narrative goes. Bitcoin, Ethereum, Terra Luna, Cardano, Solana, no one was spared. No one was spared. Your thoughts on what's happening in crypto right now?
I think this is actually a maturation process for the crypto market. There's two basic baskets of crypto projects. One, highly speculative tokens, and you could say UST and Luna certainly fit that because they've been repriced dramatically. Highly unlikely in the context of stable coins will they ever return to their old prices because people have figured out a stable coin should be stable. And that means it has to be backed by something of asset value. You can note that USDC did not correct that way. In fact, during the period of this mass correction of other algorithmic or other quantitative or speculative stable coins that really got crushed, Circle, the company that issues USDC, was able to raise $200 million from Fidelity and $200 million from BlackRock. That's unprecedented in equity for the company. So that's signaling that that type of stable coin is favored by institutional investors versus the others, which looked like they were retail products. So you've got all this speculative stuff. The NFTs have corrected. The Las Vegas side of crypto has had a nightmarish correction. And I think that's very good in the sense that it helps separate the wheat from the chaff, or the cream from the milk, if you wish, whatever analogy you want. Because the traditional projects have remained relatively stable. Sure, they've had a correction, but it's not uncommon each year for Bitcoin to give up 50% of its value, and that's certainly been the case here. Ethereum, same thing. And so that's the volatility that will be inherent in crypto until there's policy.
And we're going to talk policy in a bit. But I just want to understand a little bit more about your strategy, because in the past you've been, totally transparent with what you're doing. Last time you were on, you said like 20% of your portfolio was in crypto. It was actually bigger than your gold holdings now. Has that changed at all? Has that caused you to reflect and say, hold on a second here, let me reshuffle?
No, it hasn't. I remain bullish on crypto from the perspective of productivity. And so I think if you're buying projects, and I've always said this, Bitcoin is not a coin, it's software. Ethereum software, Solana software, Helium software, Pollen is software. All of these different projects around different sectors of the economy. Solana may be better ultimately for transactional speed because Ethereum is pretty slow. So we don't know which one of these projects is going to win. But the whole premise is that you want these for financial services. And I still believe that in 10 years, crypto will be the 12th sector of the economy, but all the existing tokens will not exist. There'll be many that just go to zero because they were highly speculative, they were fun, they had no real intrinsic financial services value. But if you were to ask me about USDC and say, look, where's the value of that? Well, first of all, you can stake it or loan it at a 4% rolling annualized yield every 30 days, and that's valuable in inflationary times. Secondly, it is a highly effective payment system because I am now accepting payment for goods and services in USDC, and very often not converting it back to fiat because I'm simply leaving it in my Circle account and rolling it into these 30-day contracts. In fact, I had a really interesting dialogue with one of my banks last week, and I plan on reading the script at the next crypto conference because it's quite interesting. It really says a lot about the banking system right now. I cannot buy more than a 3% weighting in any mandate of USDC because my regulator, or my compliance department, I should say, treats it as a highly volatile equity, as evidenced by what happened to Luna, what happened to UST. So they're looking at that, not differentiating the difference between those two tokens. So they're saying, look, you can put on a 3% weighting. So in the case of that particular mandate, that was $7 million. So we moved the $7 million out of the account into a USDC account. And within hours, I got a phone call from the bank saying, what happened to that $7 million? Why didn't we get a chance to bid on it? I said, okay, bid on it. Right now, I'm staking it out at 4% for 30 days. Right. They came back, gave me BB corporate credits for 3 years at 3%. And I said, why would I ever do that? You're not competitive. You've got to meet me at 30 days for 4%. And then they sent me all the articles about the correction of Luna. And I said, Luna is not USDC. These banks are now finding themselves getting squeezed because people are figuring out they're not advancing enough into understanding how crypto works. And their clients, I'm just one client, are moving millions of dollars out of their account elsewhere. And I said to him, look, you can bid for this money anytime you want, but you have nothing of value to me if I have to pay 100 basis points less and tie up my money for 3 years in a BB corporate credit. You're not even competitive. You're not even near what I can get. So there you have it.
So in talking about people moving elsewhere and looking for other options, let's factor in, should we see the Bitcoin spot ETF emerge in the US? We've seen how it's changed the landscape in Canada. How far away is that reality for you, Kevin?
It's a long way away. That's not what's going to happen first. I think what's going to happen first is we're going to see policy on stablecoins, and both the Haggerty bill and the Toomey bill are very clear about what they want in the regulatory environment on stablecoins. They want a 30-day audit in both cases, and they want all the underlying assets to have duration of less than 12 months. And that makes sense to me. And I think once they put that law into place, which is an easier bill to pass after the midterms, nothing's going to happen until after the midterms. Biden is not interested in discussing crypto when his poll ratings are, whatever it is, sub 31%. That's not a place he wants to go. So you're going to have to wait till after the midterms.
And guys like Michael Saylor were so excited when that mandate came out, basically saying it was the biggest green light they had seen for Bitcoin. So we've now taken a step back, is what you're saying.
Well, that was 10%, of a pre-decline for Biden. I mean, the party that you'd think would want to champion this, the same discussion was around decriminalizing or getting cannabis off the Schedule I narcotics list. The chance that happens, zero. These are not issues that when you're declining in the polls, you become a champion of. That doesn't help you. And so, the market's correcting. Biden's facing, close to double-digit inflation. People are getting gas at the pump going into the driving season at unheard of prices the last 20 years. The price of protein's up 20 to 40%. He's not sitting around worrying about crypto. So you got to think that through in terms of policy. So nothing's really going to happen. Plus, you've got a lot of different proposals coming out of the SEC around climate change and crypto and Bitcoin mining and right. All that stuff. So it's a very volatile situation.
And you had mentioned, offline we were speaking that there's a huge policy meeting coming up in Washington. Anything to come from that? Any big news we should be expecting, Kevin?
Well, the entire crypto world, whether you're, in stable coins or whether you're a Bitcoin miner, Ethereum miner, they are all gathering in Washington for 2 days. And the reason they're doing that is it's the unprecedented number of politicians that are coming to that conference. And so there are panels on pretty well every topic. This is a lobby group that lobbies for the crypto industry. You've got legislation banging around in New York legislature that would ban proof of work, even in a state that has abundance hydroelectricity, which seems ludicrous. So, there's a lot of discussion around not just Bitcoin mining, but data centers. I mean, the new oil is data, and every jurisdiction globally wants to have their citizens' data on their own land now, after what happened in the Ukraine. So the Canadians have moved their DocuSign servers into Canada. Many other countries like Ireland are doing the same thing. So you have this huge demand for data centers. And most people do not want them built off coal burning electricity. They want them built off hydropower, and they want them built off nuclear power. You've seen Biden recommission in California nuclear power plants, Turkey Point in Florida. So these are places where now investors like me are going to build data centers because we know the demand will be insatiable. And on top of that, there's infrastructure money available for this. These are each about $250 million projects. So there is private money available. But the biggest problem we're having right now is getting access to semi-conductors to build out these data centers. There are none. And so you have to really partner with some of the Middle Eastern countries that have ownership of semiconductor manufacturing to build anything in data centers now. So it's getting complicated, but the states that are going to win on this are Tennessee Valley, Florida, Montana, North Dakota. They all have abundance of power and regulatory environments that are pro-business.
Kevin, just the final point, if we could just focus in on Bitcoin for a minute or two. There's talk that with some technical analysts calling that, hey, even more pains in store for Bitcoin, that it could possibly head down to 12,000. What do you make when you hear these numbers thrown around? Do you think that this crypto winter will be a long one, or any sentiment as to where the market will head now?
The forecasts of Bitcoin have never been accurate. No one's been able to forecast its volatility. And the speculation that it was going to be a hedge against inflation was just flat out wrong. And that didn't work. And maybe it will work one day, but I'd argue that the volatility on Bitcoin is going to remain very akin to what Amazon was for its first 15 years, 30 to 50% corrections every 12 months, because there was no institutional support in the early days of Amazon. It was a retail product as people started to use the service, bought the stock. That's the same right now for Bitcoin. There is no, people talk about institutions owning it. That's just not true. They don't own any of it, and they won't until the SEC rules on it. There is some institutional ownership in the Canadian market by Canadian institutions because they can use the ETF and equity mandates, but that's Canada. They were the first to allow an ETF with Bitcoin as the underlying. They also allowed an Ethereum ETF. And so those are positioned, but they're inside of equity mandates. The actual ownership of Bitcoin itself remains elusive to the institution because of their own compliance departments. And on top of that, no infrastructure for compliance. There's no way to market into any of these systems the price of Bitcoin or whether it's levered or not during the day, the way you can with stocks that have been treated that way for decades. So there's so much work to be done.
Kevin, I really appreciate you giving us the lowdown and the rundown on all these very pertinent matters. Thank you so much for joining us for the first edition of Wonderberry here. We'll see you again soon.
I love that name, Wonderberry, rock and roll.
It's like, it sounds like the shake you have to have, Kevin, always good speaking with you. Thank you so much.
Take care. Bye-bye.
And thanks for watching. We'll have much more coming your way, so be sure to stay tuned to Stansberry Research. And don't forget to sign up to DanielaCambone.com for more great interviews coming your way. That's it from me. Thanks for watching.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.